So one of the best things about being a dividend investor is that I'm pretty calm about the current stock price. I get paid those dividends whether the stock price is up or down. So day to day, I don't care what the stock price is doing. Now that's not to say it's not important at all. It's just to say that when your focus is on the income that you're receiving, you're less concerned with the overall short-term fluctuations. So if you're going to get paid regardless, does stock price even matter at all? So this is going to be a controversial opinion, but when you're a dividend investor, the only time price really matters is when you're buying and if you choose to sell. Now, if you have a different investing strategy, maybe you're a growth investor or whatever, then price is going to be more important. And I'm not going to argue about which method is better because I think there are pros and cons to all types of investing styles. Growth investing is good, value investing is good, dividend investing is good, but they are all different strategies. So as a dividend investor, it's cash flow that you're focused on and any capital growth is secondary. So the dividend yield is important for that growth, which is why I always look for a dividend yield of 5% or more. Sometimes I'll go a little bit lower, but more importantly, I'm looking for dividend growth. Dividends that grow by 5, 6, 7% every year. They're the ones that get me most excited because that means my income is going to be growing year on year. And that also means that the net worth of my portfolio is of less importance. Now, sure, I like some capital growth, but it's far less important than the cash I'm receiving from the dividend income. I can't do a lot with net worth except brag to my friends and feel good about it. I can do a lot with the money that comes into my bank account every month. Now here's where some growth investors will say that selling off some of your portfolio is the same as receiving dividends, but I kind of disagree with this. This assumes, of course, that the price has risen so you can sell off at a profit, but more importantly, I just don't like the idea of selling just to receive income. But that is completely my opinion and some investors do very well with that method and that is totally cool. Most news outlets like to write those panic pieces when the stock price falls, but most investors know that when the stock price goes down, it's actually not a bad thing and it can sometimes be a really good thing. And it's great news if you're ready to buy. Many investors actually wait specifically for those dips and those falls because at a lower price, you can buy more shares of that company for the same amount of money. And at a higher price, you buy less. And for dividend investors specifically, it means you can lock in a lower dividend yield in the beginning, which is only going to help you long term. You're starting at an advantage. So anytime you're buying fresh or through a dividend investment plan, you'll get more at that lower price, which means you can build your dividend portfolio even faster. Now, eventually, as a long-term investor with a diversified portfolio, the stock market will go up on its own over time. Now, that's nice, but it's only really important if you want to sell, which I hardly ever do. So most dividend investors don't ever want to sell because selling means you lose part of your holdings, which means your dividend income will go down. And cash flow being the most important in this strategy, you want as much of that income coming in so you greedily hoard all of those companies that you own, especially the ones with good year-on-year dividend growth. And yes, you still want to add to that portfolio on your own and watch that cash flow increase that way, but time will also be helping as well. It doesn't matter if this is your first year of investing and you only get a tiny amount of dividend income, it will grow each and every year because the following year and the year after that, you're going to get a tiny bit more, then a tiny bit more, and then it starts to snowball. And it's going to grow faster if you're consistently adding to your portfolio as well. But the compounding effects of that dividend income growing year on year will also be at play. And you're going to receive that dividend income whether the stock price is up or down. So that's why most dividend investors are pretty indifferent to what the stock price is doing. Stock market crashes sound scary, but every stock market crash we've ever had in history has always recovered. And if you're smart and take advantage of those price falls, you'll come off so much better long term. And that cash flow will keep on flowing. It's my favorite part about being a dividend investor. Anyway, I hope you've enjoyed this video. Take care and I'll see you in the next one. Bye.